Hello, everybody, and welcome to my webinar today, where we will be talking about essential financial planning for expats living or moving to Portugal. And as a lot of you, I'm sure, will be aware, part of the reason probably why you're here watching this is there has been a lot of change in respect to Portugal over the last 12 to 18 months. And it really started towards the beginning of last year. So for those of you who are not aware, the golden visa option for Portugal, whereas you can invest into property in order to get a golden visa for Portugal, was actually withdrawn at the beginning of last year. It was a little bit unexpected, a little bit out of the blue. So that sort of ended. And then around 6 months later, Portugal then announced that it would be removing NHR. Again, for any of you not familiar with NHR, that's the non-habitual residency scheme, which is a real benefit for people moving to Portugal in terms of tax. It's a beneficial tax treatment. And that was removed. And again, that came a little bit out of the blue. And then following that, Antonio Costa, the Prime Minister, had to resign due to some sort of scandals. So these are three real big events that happened in Portugal last year. And it really has left people a little bit up in the air in terms of moving to Portugal or being in Portugal and understanding what is the best from a financial point of view. So we'll touch on that today, and we'll go through that a little bit and talk in a bit more detail about what you could do if you're living or moving to Portugal. So my name's Sam Daines. I'm a senior wealth manager here at Holborn Assets. Take a note of my telephone number there at the bottom. As you can see, it's 00447969059122. I'm on WhatsApp and on telephone, so I know when we go through things today, it will raise more questions, no doubt, for your individual situation. So feel free to drop me a text, give me a ring, or WhatsApp me. You've also got my email there, which is sam.daines@holbornassets.com. So if you do have any questions, feel free to drop me a line there. If you do want to booking for a free consultation, I am happy to speak to anybody regarding their situation. I'm also aware that a lot of people watching this will be based in the USA or in Canada, so the time zones may be different. But as I say, if you drop me an email, we can fit you in and have a chat about your individual situation. So as I say, the reason really for doing the webinar today is just to talk a little bit around Portugal and what has happened and where things lie at the moment in terms of Portugal, and some tips really of making living in Portugal as efficient as possible from a money perspective, from a tax perspective. And we'll just sort of touch on that today. So with no further ado, what I'll do is I'll talk through what we will go through today. So the agenda for today really is to give you an introduction in terms of Holborn Assets. So just a little bit about who we are, what we do, and how really we can help you, not just in Portugal, which I'd imagine a lot of you are, or moving to Portugal, but actually anywhere that you're located, we're able to actually offer advice for you. We'll talk a little bit about what to consider financially when living in Portugal. So you need to be really aware of there are a number of tips that we can give you that I think will help a lot of people. There's a few tools that I use that will help in terms of the cost of living, in terms of understanding your finances. So I'll go through that with you as well. I'll give you some ideas of some tax saving investments. So obviously with the removal of NHR, then tax efficiency or looking for the best tax options in Portugal is essential. So I'll give you some examples of where that could actually work very well for some people. We'll talk a little bit around the changes to NHR. So a lot of you, I imagine at this point, will be very familiar with what's happened to NHR, but we'll talk a little bit about the changes and also about NHR 2.0, very imaginatively called 2.0, which is essentially a new scheme that has come in to, I'd say, replace NHR. It's not really to replace it, but it's essentially give somebody the same sort of benefits as NHR would give you. But unfortunately now it's for a lot more a restrictive amount of people. So it's certain professions, certain occupations, but not for everybody. Whereas before, anybody moving to Portugal could apply and could get NHR. Not anymore. It's certain jobs and certain occupations. But we'll come on to that, talk a little bit about that. We'll also touch upon investment services for US connected clients. As I say, I know there's a number of people who are tuning in today who are US connected. As they would know better than anyone else, it is very difficult when you have that US connection in terms of finding solutions, because unlike a lot of countries, or most countries, the US, you are taxed. You have to fill out and file returns in the USA. It doesn't matter where you are living or where you are tax residents. And it's only China and Eritrea that's the same as the USA. So it's only a few countries you have to do that, but the US is one of them. And where that can impact on people is that the solutions that we would normally find for people may not work so well if you are US connected. So we've now got investment services that will help you if you have that US connection. I've got some questions already submitted, so we'll go through them at the end, and any questions and answers. I will say, if anyone's got any questions, hold them to the end, and I'll go through what I've got to go through now, and then obviously we can go through any additional questions aren't answered at the end. So that's what we'll work our way through today. And the best starting point really is just to tell everybody here a little bit about Holborn, and who we are and how we work. So for anybody who's not familiar with us and what we do, we were established back in 1998. So we've been going over 25 years now. We're a very long established, very well-known wealth management company. We're a British family firm, so we're still a British family firm. We're still run by the same British family. And we now have over 500 employees all around the globe, all around the world. And we work out of over 20, well, it's actually over 20 international offices now. So we've got an office in Portugal. We've got an office in Spain. I work between our Spanish office and our Portugal office. So it's about a 4-hour drive between the two offices. A lovely drive. You have to go via Seville. So about 4 hours between the two offices. But we have these international offices, and this is really important, so that when people move around the globe, we're able to continue to offer them financial advice no matter where they are. So the way people's lives are now is very much about moving around the globe, moving from country to country. And no matter where anybody goes, we are able to offer them regulated financial advice. We have the regulation in place for every single location that we have the offices in. When we're looking at Portugal, we actually have our license through MiFID. MiFID is one of the most stringent regulations that you can have. So we actually have that in Europe. But obviously, if people move outside of Europe, there's different regulations depending on where people are. And that includes the UK, where we're regulated through the FCA as well. We've got now around 25,000 clients worldwide. So we've got a lot of clients who use us. And when I say users, we really do everything from pensions to investments, to insurances. We do golden visa programs as well. We essentially do the whole suite of financial products. So we're essentially set ourselves up to really just help people as they move around the globe. We look after around 2.5 billion in funds under management within the company as well. And we've won numerous industry awards as well. So we're rated excellent on Trustpilot. We won year in, year out. We win a lot of the investment awards as well. And it really, for us, is about putting the client first and offering good quality financial advice, holistic financial advice, so covering all areas of your finances, no matter where you are as well. And just a bit of background about myself. I started in financial services around 24 years ago. So a long time ago. I worked for HSBC in the UK, Wesleyan Assurance and Nationwide Building Society, fully qualified, got my diploma level 4 in the UK. I moved abroad. So I worked between Portugal and Spain, and I made that move around 6 years ago. So essentially doing the same thing, but offering people financial advice in anyone really around Europe, but particularly in Europe with a focus on Portugal and Spain as well. So that's a little bit about me. It's a little bit about the firm, just to make you sort of comfortable with who we are. If anyone wants more information on us, then please feel free to give me a ring, to give me an email, and I can send you further information as well. But what we'll do is we start a little bit off really with what to consider when living in Portugal. Now, some of this is, I'd say, relatively high level. It's really just to give you an idea of things to think about. I know there's a number of people that have tuned in here that haven't made the move to Portugal yet. And what we do is we're talk a little bit about things you need to consider, and also the things to consider when you are here in Portugal as well. Now, the first one, and the rather obvious one for a lot of people, is registering under NHR. It was always the first thing that we would say to anybody if they moved to Portugal, is make sure that you register under NHR, because under NHR, it's got significant tax benefits. And that could be on income coming in from the country, income coming in from outside the country, from investment income, from pension income. So it's really, really made sense. Very rarely was it a bad thing for somebody to register under NHR. But now the real question lies is, do you qualify for NHR 2.0? So the new NHR. So later on in this presentation, I will give you the official rundown in terms of who does qualify. Now, I will say at this particular point, we are not specifically tax advisors. We are a wealth management company, so we look at tax efficient solutions, but we can't offer specific tax advice. We do have connections here in Portugal as well, where we can help you and put you in contact with people. But what I would do is give you a sort of general overview in terms of NHR and NHR 2.0 and what it is and how it works. What you also need to do is understand the difference in taxation. So what makes you tax resident? Again, seems very obvious, but a lot of clients that we speak to may not understand the difference. So first of all, what makes you tax resident? Generally speaking, if you spend over half a year in a particular country, and that's normally a calendar year, then essentially you will become tax resident. And that means you are responsible. You don't choose where your tax residency is. If you spend over 6 months in a particular location, you are tax resident. However, you can still be resident of a country without being tax resident. So, for example, I've got residency in Spain. I go to Spain sometimes, but I'm not tax resident there because I move out of Spain. So residency and tax residency are different. And then you go on to things such as your domicility status, which tends to be where you're born, not always the case, but that tends to affect where you'll pay things such as inheritance tax. So all of these have a different implications, and it very much depends on where you're tax resident. But the tax residency thing is the thing to really get your head around, because that's where you are going to be spending out money. You need to be filing your tax returns, and you need to make sure you've got everything in order, because if you haven't, you can get some nasty surprises a little bit further down the line, which nobody wants. You also need to be aware really of your nationality and the impact that has on your taxes. So what is your tax reporting duty, and what effect could that have on any investments? Now, this particularly is pertinent to people who are US connected, as I mentioned on this previous screen. That essentially, with certain countries, you don't get rid of your tax reporting duty. So you still need to report what you're earning. You may be paying tax, for example, in Portugal because you're a tax resident, but you still need to report, for example, to the US. And then there may be extra taxation, extra money that you need to pay in the US. There are dual taxation agreements. It shouldn't be too bad from a financial point of view, but you have to declare it, and there are hefty fines for not doing that as well. So you need to be very much aware of that, and that could then ultimately have an effect on the type of investments you have as well. As I said before, some of the solutions to our clients who are US connected would be very different for people who are not US connected. So to understanding this and your nationality and how that impacts on your taxes is essential. We can obviously help with that. We're happy to do financial reviews to look at your individual situation. It's a free review we do, and we can see really what your reporting duties are and how that impacts on your investment. So we can do that for you as well. Pensions and investment plannings. So you want to make sure you're minimizing the taxes on your pensions and your investments. And you need to look at previous investments for tax efficiency. So where I go with that classic example would be things such as, if you're from the UK, you might be familiar with ISAs. And ISAs are a type of savings that you get in the UK, where essentially you have an investment that grows tax-free. There's lots of different types of ISAs. So they're great. When I was doing financial advice in the UK, if you're in the UK, the first thing you do is you recommend somebody use up their ISA allowance and invest into an ISA. However, when you move outside of the UK and you become tax residents, for example, in Portugal, it doesn't have them tax benefits anymore, and you need to declare them and you need to pay tax on them. Therefore, what was the best solution at that point in terms of an ISA is no longer the best solution in the new location. So if you are making the move or have made the move, you need to have a look at what pensions you have in place, what investments you have in place, and we need to check for their tax efficiency. Are they compliant in Portugal or are they not compliant in Portugal? We need to look through all of that as well, which we can do for you. Next one, very obvious, but there's a very good tool that you can use on this. And this is to do with budget and preparing a financial plan. So everybody, we would always say as financial advice, you always need to budget. You need to prepare a plan if you're going to move somewhere or you're living somewhere. You need to write down what you've got coming in and what your expenditures are. However, it's very difficult to do that because the cost of living varies from country to country, but also from individual places in that country. And I know it's the same in Spain, it's the same in Portugal, depending on where you're living can make a big difference. So there was a particular tool called numbeo.com, Numbeo.com. The numbeo.com is essentially it's essentially a way of looking what the cost of living is like in any location. So everybody living in these locations inputs what the cost of their shopping is or their electric is or whatever it is in that particular area. And it's actually then all listed. It's listed in there to give you an idea of what you would need to have coming in that particular location in order to cover your outgoings. And it varies greatly from location to location. So it's a really good way to have a look. The best thing I suggest is to have a look on it. It's incredibly good because basically all the information actually comes from people on the ground who are living in these locations. So it gives you a very accurate cost of living analysis. So have a look at it, numbeo.com, and that will help you budget and prepare a plan wherever you are. And then obviously the point of moving to places like Portugal quite often is to have a good quality of life, but you can't have a good quality of life if you're not able to budget and plan your income and your outgoings as well. So again, that's very much essential. We can help again with that by putting together a financial plan for you. But I think in the first instance, looking on that numbeo.com is certainly recommended. And also get help before and after you move. Now, obviously, as a financial advisor, and it's the same with an accountant or a tax advisor, the amount of money you will save, even if you take out the cost, for example, of an accountant, will be so much, you would save so much more by using one than you will by not using one and trying to save money. So it really is good to use professionals. Now, there are, as I say, we're not tax advisors, but we have connections. People that we know here in Portugal are very good. So we can refer people on. We can also look at tax efficient solutions for anybody using us as well. So again, some of these are quite obvious, but I think it's really important to do that. And as I say, go back to that numbeo.com and have a look at that. You will find that incredibly useful. So when you become tax resident in Portugal, what you need to look at, firstly, is registering under NHR. What are the potential benefits? Well, we're going to talk about this a little bit in a later slide. So what are the benefits of NHR? Why should you be applying? Obviously, this is now NHR 2.0, but we'll look at that as well. Next question, do you rent or buy? Again, this is a hard one to answer for people. It varies from person to person. What I tend to find from moving over to Portugal and to Spain myself is quite often what you plan in your mind is not where you end up. So I knew when I moved over here, there was a certain place I wanted to live. And actually, when I came over here and spent time over here, it became apparent to me that wasn't the best place for me to live. So there's a big argument often for renting before you decide to buy, so that you can actually work out where you want to be. It does make sense from that point of view, because when you make you do the jump and you actually buy a property, you've then got to factor in all the taxes associated with buying a property. So what you really want to be doing at a point that that is the property that you want as well. You also need to be mindful as well. If you buy somewhere, for example, having not sold a property you already have somewhere else in the world, for example, the UK or the US, that could open you up to things such as capital gains tax, because it would then be your second property. So you need to be aware of that as well. So renting could quite often be a good idea. For example, particularly if you have another house. Even if not, sometimes you might sell that other house, but to actually scout the land and work out where you want to be, it does make sense from that point of view. Next question, is an accountant necessary? Will you need help doing your tax returns? I can absolutely recommend that you need to get an accountant when moving over to Portugal or any other European country, because you need to know how to arrange everything in the most tax efficient way. And that's what an accountant will help you to do. And as I said, whatever cost that is, it will save you that 2, 3, 4-fold by getting the accountant involved and paying them as well. And it's the same with a financial advisor such as ourselves. There are things we can do to help people with that have money that are investing in Portugal to make your money tax efficient. And particularly with the removal of NHR, this is even more important. And I'll give you an example of what we do. So in terms of tax efficiency in Portugal. So if somebody is here in Portugal and living here, there are Portuguese compliant investments that you can look and you can invest into. Now, these go by different names. Sometimes they're called Portuguese compliant investments, Portuguese compliant wrapper. But the main point to this is Portugal has some very unique quirks compared to other countries that actually make it, if you know where these quirks lie, they can be very efficient, very tax efficient for you. So a Portuguese compliant wrapper is essentially a tax efficient unit linked platform, and it's very popular with expats. So firstly, within these wrappers, within these investments, you can hold your money in euros, sterling, or US dollars, and other currencies as well, normally major currencies. This is obviously particularly important when it comes to looking at currency risk, because obviously to change a currency, so for example, you move into Portugal, if you change all your money immediately over to euros and you're changing that money at a bad time, then you could be losing a lot of money on the exchange rate. The idea of a Portuguese compliant wrapper is you can actually hold money in different currencies without having to make that exchange until the point that you want to, which actually can save you a lot of money. If managed right, it's a really good way of holding your money. Now, where it's particularly good, again, there are many different types of wrappers, by the way. This is not one company. There's lots of different companies that offer these wrappers. What we do for our clients is find out the best ones, the most cost-effective ones, the cheapest ones, if you like. But the amount of tax you save is massive. And if you look on this, the way they work, essentially, these wrappers, is that you would normally have a tax rate of 28% on savings and investments in Portugal. So that's the rate, the tax rate of 28%. That's only on the growth. So only on the growth you've made. If you don't make any growth, you don't pay any tax. But if you've made some growth on your investment, your tax rate is 28% on all types of investments. So for the first 5 years, that would remain the same if you were in a Portuguese compliant wrapper. It would be 28% only on the growth if you take money out. If you just leave it in there, you don't pay any tax. It's only when you take it out. But actually, where this becomes very good and very unique is that after 5 years, that tax rate drops. So once you've held it in that wrapper for 5 years, that 28% is reduced by 20%. So your tax rate after year 5 on any withdrawal, not when it's in there, is then only 22.4%. So you're now already starting to save a little bit of tax, because you're only paying 22.4%. So this is really good for people, particularly who may have a lump sum of money, who then want to start to take an income a little bit further down the line, 5 years or more down the line. After 8 years, it becomes even more tax efficient. So instead of paying the 22.4%, you actually only pay 40% of the 28%. So your tax rate goes down to 11.2% after year 8. So once you've held this money in there for 8 years, and you then want to start doing withdrawals, you only pay that tax at 11.2%. Only on the growth element. So you are then straight away saving yourself 60% in tax after 8 years by simply holding it within a Portuguese compliant wrapper. Now, these wrappers, as I say, anytime money is held in them, it's only the growth that is taxed, and it's only taxed when you take it out, not when it stays in there. So as long as it stays in there, you get gross roll up, it rolls up and it rolls up and it rolls up. So it's a really effective way of saving money as well. It's portable to other countries. So if you decide that you want to move away from Portugal and you want to come to Spain or France or the UK, wherever you may go, you don't have to close it down. you can keep it running and it becomes compliant in a new country that you move to. You'd let the company know, we would sort it out. And then obviously it then depends on the taxation in a new country, but they remain tax efficient wherever they go. And you've got all types of investment strategies. So it's not just stocks and shares investments. You can do very low risk investment, bonds, cash, stocks and shares, depending on your appetite for risk. And you can take income and withdrawals. Okay. So as I say, this is an example of holding a particular type of investment for a longer period of time, and immediately you're saving yourself. You've got a 60% reduction in tax. And when you're talking about 60% on a large amount of money and some of the income and the interest you'll be getting, it's a lot of money. And again, this is what we do for a lot of our clients. It's really important to be aware of these type of investments. As I say, as a company, we search the market, we find the best investments for our clients, and we manage these for our clients. So we will review them, we will look after our clients, and we on an ongoing basis. But this is really something to look into, particularly with Portugal, because it's very unique to Portugal. And furthermore to this as well, these Portuguese compliant wrappers, again, this is very complicated, this bit. So I don't want to, it's not a one size fits all, but it's just to make you aware. When you're living in Portugal, you're subject to capital gains tax on your worldwide real estate gains. So if you sell a second property, you are then potentially liable for capital gains tax. However, there's a little known benefit that if you actually invest the proceeds of the real estate gain into a Portuguese compliant wrapper, and you do it within 6 months, then you can actually give yourself no CGT tax liability. It has to be done within 6 months. You have to be over the age of 65 as well. You've got to declare it on your tax return, and you've got to be in the same name as the property that was sold. But if you fulfill these criteria, not only are you getting the tax benefits in terms of a Portuguese compliant wrapper, but you're also saving yourself money on things such as capital gains tax. So a classic example with this would be somebody selling their property in the UK or the US, wherever it may be, and you think, well, I actually want to have some of this money or all of this money to actually provide me with an income. Well, if you put this into a Portuguese compliant wrapper, you then leave it there for a while, you pay no CGT tax on the sale of the property. You can then take an income from that money as well. And obviously, if you're then not taking an income for 5 years or even 8 years, you're going to save yourself a lot of money. So the key to this really is to seek financial advice. People such as ourselves can advise you in terms of this. It's not a one size fits all. As I say, if you've got a US connection, this may not be the best option for you, but we would look at that obviously on an individual basis. So next, let's talk a little bit about NHR. Okay. So who can still be covered by the regime? Okay, so the budget law has been voted on. So we know the NHR is ending, and it's been approved to end as of January the 1st this year. So if you're on the existing NHR regime, it will continue to be applicable for you. So you'll continue to benefit from that, okay? And for anybody that was looking to move over to Portugal last year, and I'm sure a lot of you would have been aware of this, then you could potentially still get in under the grandfathering rules, okay? So the idea of the grandfathering rules was to not have a solid cutoff point, but more of a way of phasing people out of NHR. So I'll come on to what qualifies under the grandfathering rules. But the idea of this really was that if you had that intent to move to Portugal, since it was withdrawn last year, or there are certain dates in this, then they would still honour it and you can still get NHR. I would imagine a lot of people that would fitted into that category probably have already continued now to get NHR, but there may be some of you watching that's still the case. So to fall into a grandfathering rule to get NHR, these are the rules. So it's a bit of a busy slide, but I'll just read it out. Okay, so you need to have basically an employment agreement or secondment agreement that was signed by the 31st of December last year to perform activities in Portugal. So essentially it's an intent to work in Portugal, a letter from an employer to say, yeah, you're starting your new job, etc., etc. That would prove that you had the intent to move over. Things such as a lease agreement or possession of property. So if you had a property in Portugal that you had a lease agreement on that was concluded before the 10th of October 2023, then potentially you will be able to get NHR still. But that's the same if you were looking to buy a property by the 10th of October 2023. So if you'd already registered, again, in terms of what paperwork you need, it's far more in depth. You need to speak to a tax advisor. But to give you an idea, if you had that contract, that reservation before 10th of October last year to buy a property, then you could still qualify under NHR as well. If you'd enrolled as well your dependents at a Portuguese educational establishment by, again, that key date is the 10th of October 2023, you could still qualify for NHR. If you had a residency visa or permit that was valid by the 31st of December 2023, then again, you could qualify as well. And there are a few other little caveats as well. I don't want to get into too much detail because everyone's situation, again, is going to be different. But what we do recommend with this is speaking to a tax advisor. If you want to get a good tax advisor, then obviously drop me a line and I can tell you who we would use here in Portugal. But it's worth speaking because anybody that can get under NHR, it's certainly worth doing. But there is now NHR 2.0. Again, I don't think that's the official name for it, but NHR 2.0 really is a way of sort of condensing it down and giving the same benefits, but to a smaller number of people. And you've got to realize a lot of this comes from the Portuguese point of view, and rightly or wrongly, whatever your thoughts are, the withdrawal of the golden visa program in its current form, or its form last year, was to do with the economy, to do with the housing market in Portugal. And by removing, again, people could argue economically with regards to this, because if you look at the statistics, it doesn't really add up. But the idea of changing the golden visa program in Portugal was really a way of stopping the house price increase, which is happening not just in Portugal, but actually is happening all over Europe. And it was a way to curb that. The same thing really is to do with NHR. There's a lot of people coming in, and it's unbalancing the economy would be the argument that they would use. In reality, I don't think it is, but it's obviously something they've looked at, and they feel that it is something what they want to look at. So NHR 2.0 really is just a way of making that same benefit for fewer people. Now, this is a really complicated slide, and the reason, if anyone, have a look at this very carefully yourself, because I've spoken to our lawyer that we have here in Portugal in terms of who qualifies for NHR 2.0. So this is from the lawyer's perspective. You'll find this information in Google, on the internet as well, but obviously sometimes people summarize it and simplify it, and you've got to be careful of this. Again, I can't stress enough, we're not tax advisors. This is really just to give you an idea. But the idea of NHR2 is, and I've underlined the main bits here, is really to attract a certain type of employment or a person coming into the country. And that is really people, as you can see from point one, who are in teaching, in higher education and scientific research. So this includes scientific employment in entities, structures and networks within the national science and technology system, as well as jobs and members of governing bodies recognised as technology and innovation centres. Now, the interpretation of this is, again, a very grey area. And I know there'll be a lot of you thinking, well, I don't know if that applies to me or not. And this is, again, where it's worth speaking to a tax advisor. Again, by all means, sort of ask us and we can put you in contact with someone. But the technology and innovation is a really big thing here. So number two as well, they're looking to people who towards basic contractual benefits towards productive investment. Again, this is qualified jobs and members of the governing bodies. So again, it's a very vague way of describing it. And again, have to look more into detail. If you think it might be something that affects you, have a look in more detail, drop me a line and we'll see what we can find out for you. Next one is highly qualified professions as defined by the ministerial decree. So again, there's very strict definitions of what will qualify and what won't. So you need to be very mindful of this as well. There's other qualifying jobs, so members of governing bodies or entities engaged in economic activities, particularly in attracting productive investment and reducing regional asymmetries. Again, very confusing, very complicated way of saying it. Again, advise you to seek some help on this if you don't know if it applies to you or not. And research and development personnel as well. And people for certified startups. So again, that's quite startups again is a bit of a grey area, because what does that actually cover? If every startup? No, it wouldn't be. There'd be certain rules. But this information, and again, it goes back to seeking advice and seeking help. A tax advisor specifically will look at this for you and say, yes, you qualify, or no, you don't. But this is the official guidelines, if you like, of what does and what doesn't qualify for the new NHR. So this situation is certainly not everybody like it used to be. It is people in higher education, teaching, scientific research, startups, technology and innovation, that sort of thing. That's what NHR 2.0 is aimed towards. And the benefits of NHR for you, for those that aren't aware, I mean, it was initially implemented back in 2009. The idea was to attract wealth and talent into Portugal. And the sort of benefits you had was essentially a flat rate of 20% on personal income tax. Now, when you think that that's normally between 15 and 48%, so for the higher earners, 48%, that's a pretty big decrease at 20%. It's brilliant. And it was for 10 years. So this is not just for a short amount of time. It was for 10 years. And incidentally, it fitted really perfectly with things such as the Portuguese compliant wrapper that I spoke about before. After 8 years, that became really compliant. So people would sort of park their money in these Portuguese compliant wrappers. You'd have your NHR, and then towards the end of NHR, you could then start to draw money out of the wrapper. So it worked really well. But yeah, personal income tax at 20%. Global income as well. You don't pay any tax on any dividends, interest, royalties, capital gains, rental income from outside Portugal, and income from employment in another country as well. So they'd be paid in the source country. But normally that could be 28 to 48% if it was taxed in Portugal. And again, there are other things such as pension income as well, at a flat rate of 10%, no inheritance tax or wealth tax. But again, this is really what it used to be. This won't be the case now for everybody. You need to be very mindful of your own situation as well. So that's really as much as I can detail as I go into NHR. And I know there'll be so many people watching thinking, well, I need to know more about my specific situation. And this really is that if you are living in Portugal or seriously consider moving, you need to speak to a tax advisor around your own situation, because it can make a big difference in terms of what you're paying. Now, for anybody who's watching who is a US connected client, okay, this is a really tricky for a lot of people to advise on US connected clients. US clients are essentially taxed on worldwide assets. So this can result in negative tax consequences if you don't structure your investments correctly. So you need to be risk managed, you need to be currency sensitive, it needs to be tax compliant. And in the underlying assets of any investments that you hold, you need to avoid things such as passive foreign income, investment company as an underlying asset. That can cause tax liabilities in Portugal. Tax wrappers such as ISAs, non-US pensions and offshore bonds may not be recognized in Portugal. So what we do with clients is we would do a full fact find on yourself, whether you're US connected or not. We would come up with solutions. If you are US connected, you have a reporting burden as well. So you need to be reporting to the US. So when it comes to anybody that's got a US connection, we partner with LGT Wealth Management, and they are a huge company, LGT Wealth Management. They're sort of one of the biggest companies you've probably never heard of, if that makes sense. They've been around a long, long time. They're sort of big, massive globally, but they actually have a US side to them, specializes in the US, and we partner with them. So we speak to our clients, we do the full fact find. We then liaise with LGT and we put together a solution for you with LGT to make sure that it is right for you in the US. In terms of LGT themselves, they are very much like ourselves. That their whole culture is around the client, to do what's best for the client. They've got a lot of experience. They work on the basis of performance, service, and integrity. All the fees are transparent. They've got a whole of market approach. So just where I'm going with this, for anybody that has that US connection, whether you are in Portugal or you're imminently moving to Portugal, we can set up a meeting. We can help you to overcome the problems that you would normally have when moving somewhere such as Portugal. So just bear that in mind. As I say, feel free to email me, and if that's with your own situation as well. So what I'll do is I'll just run through some of the questions I've had. I'm a bit conscious of time as well. We had some questions come in before the webinar. As a lot of these are tax questions, which I know is the obvious go-to for a lot of people. I've got one here. If I pay the 20% tax in Portugal under NHR, will I still have US taxes on top of it, or is all income considered already taxed? Well, there is a dual taxation agreement with Portugal and the US, so you shouldn't be paying tax twice, no. But you need to also make sure that there isn't any other, obviously people's situations are very individual, and there may be other areas that may affect. So the way to get around that, again, is to have a financial review, look at your individual situation. But as a general answer to that, no, you should not be taxed twice when there's a dual taxation agreement as well. Somebody here, I have a VFX company supplying technical and innovation in services for film and TV, and I wish to start this in Lisbon, eligible. So I think they mean for NHR 2.0. We would need to look at that individually. That would be something you go to a tax advisor about, and then they can look at your individual situation and see whether that affects you or not. I think from my point of view, looking at that would seem to me that would fit in, but it's not, it's not as simple as that. They would need obviously evidence and that sort of thing, but it does seem to be one that would tick the box under NHR 2.0, but obviously be very mindful as well. Got someone here that says, what is going on with Portugal's government? Well, that's a good question. We don't know. We know last year, obviously, it was a bit like a soap opera from I was doing these webinars last year, and we went from obviously the removal of the golden visa to the removal of NHR to the removal of the government. So we don't know. Hopefully things now are going to be a little bit more stable. We thought maybe even that NHR might come back with a new government, but that's not been the case. I think that is gone for good. So just be mindful of that. Hopefully now it is more settled, and it's going to be a lot more straightforward from now on. How do I prepare financially for the move and taxes? As I say, use numbeo.com, and taxes as a tax advisor is what I would advise. Cost of living in Portugal. What is a euro compared to a US dollar? I think at the moment is 1.09 US dollar to the euro. That changes all the time, and it again is really important with currency exchange as well, because you need to make sure that you need to make sure obviously that oh, excuse me, my computer's gone funny. Yeah, so you just need to make sure that the exchange of the currency is not going to adversely affect you, because with regards to currency, then you can lose all the money you make on just exchanging currency, which again, going back to these wrappers that you can have, it's worth looking into these. We're happy to do that for you. Right, and that's it for now. I haven't got any more time to go through. What I've got, you've got my number there. I know someone's put in a question about putting my number on there. You've got it there. So just to jot that down, 0044 7969 059122. It's a UK number. I am based here in Portugal and over in Spain as well. I'm on WhatsApp as well. And take a note of my emails. Probably the best way of getting hold of me is sam.danes@holbornassets.com. And if you want to look at your individual situation, we do offer free financial reviews. So we can look at your individual situation. If you are US connected, we can look at that as well.